Good morning, everybody. This is Dennis Wilburn from the Active Trend Traders. I want to welcome you to the How to Make Money Trading Stocks webinar. We're going to do a real quick market review, look at some stocks, and hopefully give us some ideas going into next week. Remind everybody that all the materials that we do present are for training purposes only, and the traders should always paper trade any new method prior to the risk of their own personal capital. And I love to do presentations, and a couple that I can do for either IBD meetup groups or just about anybody. I can also, if it's not an IBD meetup group, if it's just a regular trading group, I can do topics covering options, covering trend trading, the whole 9 yards. But these are kind of two focuses that I focus in on that complement some of the IBD type of trading, the art of trend trading, and also the truth about breakouts and their alternative entries. So let's take a look at what's going on in the market. I kind of characterize the strength. We're not going to argue this week with the price action because the price action has done a very good job of pushing the markets higher. But the question is, that I kind of come away with moving into the weekend is, it seems like this is more emotional strength and that it's reactionary strength, reacting to, the Fed basically coming out a little bit soft on their concept of raising interest rates, that they may delay and slow the process down. At the same time, we're not going to argue with the price action because the market has moved higher. So the question I come away, we're strong, but is it strong enough? Both the Nasdaq and the S&P are both back to resistance that they saw earlier in the year, and only the Russell has actually broken out to new highs and continues to push higher. And this can be, I think, partly related to that the Russell is primarily the small cap index, and the small cap stocks definitely are in favor of keeping interest rates as low as possible, because typically the smaller companies have the larger portion of their they've borrowed the larger portion of their funds, and so low interest rates help them when it comes to like paying back the what they have borrowed. Outside influence, the market has just been playing over the last almost seemed like all year long what I call hide and seek with the Fed. Well, what I mean by hide and seek with the Fed is basically it's been trying to guess what the Fed's going to do, and that's why we've seen these, Wednesday after the Fed reported, we saw the market just rally very strongly. Well, why were they rallying? They were rallying because the Fed came out and said, hey, the economy's not looking quite as good as we thought it was going to be, so we're not going to be in a hurry to raise rate. Market took off. And then also the issue of the oil and the dollar. Oil looks like it is trying to find a base or a bottom, which we may get a rebound off of, but then the very strong dollar. It's interesting how oftentimes the market and the dollar are contrarian to each other, but right now the dollar moving up strongly and the market doing the same thing. So they're totally in. Excuse me, I was just reading a note here. So the market and the dollar are in sync and continuing to move higher. Last week, as we looked at the stocks where the markets were oversold and looking for a place to bounce, and they found it significantly. Earnings seasons were a few weeks away from the next from the second quarter earnings season. So here's what we've got on this percentage of stocks above the 20-day moving average on the NYSE. about a week ago, a little bit over a week ago, we get a rebound off the lower level, about here at the 30% level, and it basically has moved higher. This large bar right here, highlight that right here. That is the Fed meeting day. And at that point, it was just, here's where we started the day, and was kind of meandering here, and then just rocket shipped out of the low to hit up here about 60. A little bit of a pullback yesterday, and then this morning had a really strong gap up. The question, of course, being is one thing that we have been concerned with is this negative divergence on this indicator. Is that each time the market is going back to December, each time the market has gotten up towards its highs, the number of stocks participating in the rally, moving up to the highs, was shrinking. In other words, less of the stocks were actually above their 20-day, and there's kind of several factors for that. But one of the primary factors is that if the price of the stock is below the 20, that is a sign of at least short-term weakness. And so we'll see what happens going into next week. Are we going to get back up into this zone here, which will still be 70% of the stocks above the 20-day moving average? If we get a strong breakout from resistance, and when we look at the chart in just a second, on the S&P and Nasdaq, then it's likely to take us on back up to the 75 or even back to the 80 level. If it gets back to that area, that isn't necessarily the signal to go short or anything like that, but if you've been riding some of the stocks that have moved from, when the market was way oversold, up to this point, it's a time to be looking at, this may be a time to lock in some profit, not necessarily all of them, especially on the longer term positions, but at least take just a little bit of profit off the table. That's one thing that I find, we traders, we oftentimes kind of have an all or nothing mentality. Either we will, we want to stay in the trade and get, the max gain. And in reality, a more, I don't know if you call it conservative or a good approach is just to say, you know what, I'm going to pay myself for the great work that I did in analyzing this stock, jumping into this stock at the right time, and therefore I'm going to pull some of these profits off the table. And then just stand by and wait, because oftentimes the stock will recycle itself, and you have another opportunity to get in. One of the stocks that we watched early in the year, we took a little bit of profit on it but missed the big run, was AMBA. AMBA could have been traded about 3 times this year, all for really nice returns. Again, doing a partial position, take a little bit off when it got to a certain point, and then let the rest of it run. Taking off partial profits really helps us when it's time to, sit through a correction. Because if you've got, cash in your account from the profits, a 7% drop in the price of the stock doesn't look so scary. So let's take a look at the charts, see what they're telling us today. Okay, the first stock I had up here is SPX, is the S&P index, and as you can see, we bounced off the 100-week moving average, or 100-day moving average last week, and has moved higher ever since. It's been a nice up move. I wanted you to take a look at the steepness, though. We had a really fast drop. Now we've had a fast rebound. Oftentimes these quick drops followed by a quick rebound are indicative of, a little bit of, I won't necessarily say weakness, but it's just, price action that is suspect. And I think one of the things that, additionally makes it suspect is we take a look over here on the weekly. what do I have going on? Yeah, we've got the true strength staying above its zero line, which is positive. However, look at the momentum here. We've had a big week this week, right? However, the momentum is basically has hardly budged. Instability is a really good word for it, Barb. It really is. And so it's the lack of order. Although, great move, moving up. And I wanted to highlight one thing before moving on to the Nasdaq is if you know how to use Fibonacci retracements, this is something there's a lot of different reasons and clues that the market gives us on when to get in, when to get out. I'll draw this Fibonacci retracement in here. And as you can see, this was on the 11th, which was last Wednesday. Wednesday of last week. 11th, we dropped below this 50% retracement from the low back here in the first of the year, or in January, up to the high in late February. It drops down below that level and then comes bursting back up through it, retest it the next day. This is indicative of when you get these rebounds. Some people actually use the fibs to plan their trades around, and on this it pulled back exactly within the fib box, and this has been a tradition, a personality of pullbacks, and was first identified by Charles Dow back in the late 1800s, early 1900s. That he basically kind of said it seems that during healthy pullbacks prices will revert or pull back somewhere between 1/3 and 2/3 of the most recent price gain. So when we take a look at that recent run, it pulled back within the 2/3 level. And it was interesting when Fibonacci's came along. It turned out that Fibonacci's were very close to that 1/3 to 2/3. So it's always a good idea on the weekends, not necessarily every day, but weekends, saying, okay, what kind of retracement am I looking at here? And when it gets to a certain point, that's when the clues come together and the stock or the index becomes more interesting. So I highlighted the other day this zone up here on the S&P. This is a resistance zone that runs from about 21, just a little bit, 2104 up to 2120, and we are now in that resistance zone. If we are going to show any weakness, this is when we would be anticipating it. As you can see, the price on the S&P has extended, well above the 20 now, and definitely well above the 50. Something is making noise outside my office window. Let's take a look at the Nasdaq really quick. The Nasdaq, same thing, has basically now popped up into this resistance zone. And so when it's in the resistance zone, it's not telling us get short or to do a bearish trade on Nasdaq or the QQQs, but it is saying that this could be running out of gas, and here's the level that it needs to break through in order to continue on with its with its uptrend significantly. In this case, it would be the level of 44.83, 44.84 amount. If we finish today with this particular candle, it will be a hanging man, which is a bearish reversal signal. The top of the hanging man would be if prices go above that level, then that would void the signal. But as you can see, Nasdaq also extended. Nasdaq is looking a little bit healthier on the daily chart. The momentum has turned back up. The true strength indicators moved back up. But like the S&P, look what's going over here on the weekly chart. Not a budge on the momentum to the upside for such a big, a big week. Russell. Okay, the Russell. Nice breakout after the Fed meeting, and has just continued to push, power higher to all-time highs. What I would be anticipating moving into next week is we are getting nicely extended above the 20, and so it would not be surprising to hit a level and then start pulling back. A couple of ways to make some determinations on that. One can also take the let me make sure I have this right. There we go. Another way to use the Fibonacci's is to look at the extensions of the Fibonacci, and at this point here, it would be 161.8% of this, basically this move here, and that can often be hidden areas of resistance where once they are hit, there tends to be at least a slowdown and or a pullback. And the other thing we can do is we can take a look at the level from this level here to this level here and then extend it up. And that would potentially give us another target for the S&P. Moving into next week. So there's our range. We just take that and move it up. That's easier said than done. And get it approximately to where it broke out. And then that would give us an upside target of about 1280 on the Russell based on this little pattern right here. And is it going to run up there immediately? No, not necessarily, but it's making a good try trying to run up there that quickly. But that would also, you could almost draw a trend line or a resistance line in there, and that would be a pattern resistance line. So that's any questions on the index, guys? Okay, I wanted to show you something real quick on TNA. I keep these, this is a 10% above the 20-day moving average envelope, or 20% below the moving, I'm sorry, 10% above or below the 20-day moving average. And typically, when prices get up towards or get close to that level, that can also be an indication of when things will be turning around. That's one of and the turnaround, like again, does not have to be a total reversal. It can just be I'm going to pause. I'm going to pause here and just rest. And the question is, Gary, no, it doesn't necessarily mean to go short IWM or any of the. Is just to basically be watching, because at this particular point we have no reason to go short in any of these entities. We'll wait until we have no bearish signals up here. That's a strong weekly move. It does, like I said, it does at least give me pause that while yeah, our true strength indicator is pushing higher, the momentum behind this move hasn't moved the needle one iota up to the upside. One would expect with that kind of a move, we would have a higher level of momentum, but at this particular time, we don't have that. So it brings into question the strength of the move. The legitimacy of the move is what it is. I mean, the price action is the legitimacy of the move. Okay, good question. And what you can do, Gary, let me throw back on the Russell here. And we did that measurement on the Russell. What you can actually do is lay in some alerts. Let's say we want an alert, and you just punch in an alert here at 1270 and then maybe 1278. And then when those alert, then you go take a look at the chart and say, okay, am I getting any reversal signals at this point? Does that make sense? Great. So let's take a little bit further look here. Okay, last week's picks. We got into Habit earlier this week, and basically it's just a great story in that it could be the next CMG, Chipotle Grill. We shall see. All we know is that we have a Habit restaurant here in our community, and it is constantly busy, and I'm talking to the manager a little bit in there, and he said that their expansion plans are really significant, and it's been getting some very positive write-ups in IBD. Other stocks with basing characteristics that I'm watching very closely. I didn't think I would be saying this from a positive standpoint, but Tesla is worth watching, especially if you're an option trader. It still is maintaining its emotional volatility that makes it a good short-term trade. But the announcement Elon Musk came out with yesterday, when he originally tweeted that last weekend, it moved the stock like $15 or $20 to the upside. And now that the news is out, the stock is fluttering a little bit, but it's building on what could be a pretty nice, pretty good-looking base to go into the second half of the year. Keyhive is another one, developing a really nice consolidation base. It too, great options on Keyhive, and then VDSI. It's a very volatile stock, but it has been also acting, starting to show it's ready to start bouncing off of support. And if it does and moves up, even if it gets back up to its highs after earnings, it would be like about a 30 to 40% run, depending on where a person. And I'm not saying any of these are ready to buy, but I am definitely keeping my eye on them moving into next week. So just want to remind everybody that the Active Trend Trading System, our motto is we try to clarify, simplify, and multiply. And I appreciate the emails that I get from folks who say, hey, that wasn't very clear. And so I go back and I adjust what has been said or what we've demonstrated or what we've shown in our midweek market sanity check training session. But, all good trend trading systems, and actually all good systems that, for trading stocks, they basically show you what to trade, and we only trade top quality IBD stocks, when to enter, when to exit, both to conserve, your capital, in other words, stop losses, and also targets for profits, what strategy to use, and then what to expect. So that's basically it for the market overview and a couple of stocks that we were looking at. I do have a couple of more stocks that I'll be sharing with you, you guys, as we do the stock review. And so with that, if there are no more questions about the market review, I'm ready to start looking at some stocks. Are you? And so you can start shooting in your request for various stocks. One of the first ones we got was ARUN. ARUN has been a past winner, and okay, ARUN. Okay. Aruba Networks. The issue with Aruba Networks is, this was a great move here. We actually opened a option position on this that we're probably going to close. It was basically a very speculative option position. They went back and double checked the news, and ARUN is potentially being bought out, I think, by Hewlett-Packard. And they agreed on a price of about $24.50, $24.55, and that decision is in court because basically some of the people are saying you did not show the proper taking care of your stock, your stockholders, because the value of the stock is actually up to about 27 in the around the just above $30 level, and so what they're saying is, your fiduciary duties you did not handle very well, and so this issue was in court. The thought is that if that was settled quickly, or that we could get a blow up off the top, but right now prices, and if you're ever looking at a chart, this is a really good example. If you're ever looking at a chart and all of a sudden you see this huge gap up or just a move up, and all of a sudden prices just go sideways like this, double check the news to make sure that there hasn't been a buyout offered. And so that's what's going on with ARUN, Tamsin. How's everything over there? So pizza. Okay, nice move off the bottom. Take a look over here on the weekly chart. We came and we hit it supported $60 last week, and then it has now rebounded up to 64. What are the indicators telling us? Okay, one thing is we're getting a nice rebound today or this week, and this is what I would be looking for. See right here on the momentum. The momentum is ticking up for the week. The weekly indicators are looking like Papa John's wants to continue to move up higher. Yeah, of course it does have its resistance. It is bumping its head on up here in the 65 to 66 level. There is a small resistance zone. We would want to see, as it continues to push up here higher in this basically just kind of a flat or a horizontal range bound formation, is buying volume going to come back in and start pushing it above average? We've got a pretty good indication here that momentum is on its way up. True strength is on its way up, but we're just about at resistance. Okay. KITE. Let's see, Dorothy Kite. It's got good daily volume. It is trying to do, we had tried to do a nice breakout yesterday. There must have been some news. Now it's coming back down to retest. I would be looking for a potential, this would become interesting to me anywhere from, about 68.30. See what it's going to do around these moving averages. Now it may pull down here to midway in this big candle here and then rebound. I would be looking to flip over to the intraday 1-hour chart to see if there is a potential setup. But right now we've got let's see, I'm going to say fell in price about 32%. So this left side qualifies as a formation of at least the left side of a cup. So it's deep enough for a valid cup. And now it's working on trying to move higher. This week's price action, not quite an engulfing pattern of last week's, but we had several things: an inverted hammer, a hammer, doji, and so it is looking to where it can basically base. it's good volatility, moved up here nicely, and so now it's going to need to digest this, and we'll see how far it pulls back before it goes higher. That's what I'd be waiting for to buy. That was Dorothy's question, is Kite, wait for what to buy. So what other stocks we have, folks? Here's one I want to bring to everybody's attention. It's looking, it's not ready yet, but this is a newer issue that kind of broke out of this IPO pattern over here, went higher after earnings, dramatically higher, and now is coming back and retesting that breakout. And it's still digesting and retesting that breakout, but we kind of like it. We're getting this last pullback, lower volume on this pullback. And I'm going to be watching this somewhere between 50 and down here to 47 for a potential entry to get into CyberPark software. Here's one of the stocks that I highlighted earlier today, Keyhive. Keyhive is basically on a weekly chart. It has come down and is building this consolidation area. We can see it on a weekly chart. It's got a low down here just below 45, and it has pushed all the way back up to just above 50. The high on this candle is 51.25. And we're getting some positive traction with this particular stock in that the volume starting to tick up, hasn't busted above the 50-day moving average on the volume. But what we're getting is we got our divergence in momentum. TSI is moving up, and it's looking really good here on the weekly. I'd like to see weekly-wise the momentum start to tick up. We're getting this is good positive divergence here on the momentum. And I had one other thing to say about, the other thing is a bullish cross of the 8 and 20. Where's it likely to go? If we get some retesting in here, well, likely to go back to either the 50-day moving average or this downtrending line here. And this may be the initial indication because it's gone down enough. It's had 1, 2, 3, 4 down legs. And that typically is when stocks will start to say, hey, I'm going to start turning around. And that's when it's very interesting to just stand by and be patient for a base to form. As you can see, I mean, this was a $120 stock at the beginning of basically the beginning of last year. It was the #1 stock on the IBD 50 at the beginning of 2014, and it has now since fallen off of that. But it looks like it may be, like I said, if this can consolidate here, it may be ready to turn around. Habit continues to construct its base also. Keeping our eye on that one. And let's take a little quick look at Tesla. Okay. Tesla is appearing to start, hammering back up through the moving averages. It is now, you take a look at Tesla from the long term. I'll go out just one more spec here on the weekly charts and say, hey, Tesla had a big, huge move up. It is now coming back down and testing in the past support zone. And if we can get a break back, if this holds and then we start building something constructive, as if it just continues to inch its way back up and finally breaks out of this trend line, Tesla could be back off and running, because if we go through 210, then it's going to start bringing in the almost 230, 250, and 260. So Okay, any more stocks, guys? Okay, well, if there's no more stocks that you want me to take a look at today, we will sign off for today, and I'll get this recording up on the website as quickly as possible. So, hey, thanks for joining us today, and look forward to continuing with the Fridays How to Make Money Trading Stock show. And thank you, Dorothy. And we'll see you guys next week. Have a great weekend. It's been awesome getting to see everybody. Thanks a lot.